Hey you guys, welcome back to the channel. My name is Shaquan and I'm inviting you guys into my trading space at a very vulnerable moment where I've lost a position. Now the reason why I say it's a vulnerable moment is because when we lose a position, this is when we can have a feeling, just like when we win a position, we can have a feeling. And I think it's important to own your feelings when a trade is completed, whether you're happy, mad, sad, or whatever the case may be. But always understand that when we enter a trade, we're entering the trade by logic. So I'm going to explain to you guys the trade that I lost, but then I'm also going to talk to you guys through how I plan on bouncing back. And this is a part of my routine for when I lose a position. So the position that I lost was on pound AUD. Now I shared this analysis in my previous video, so if you guys like to watch that video leading up to this analysis, then you guys can go ahead and pause and watch that video or watch that video after this. Okay, I also shared analysis on the Australian dollar and United States dollar and the New Zealand dollar and the United States dollar as well, and I'll get to those after I get through this analysis. So this is pound AUD on the daily time frame. Now, please keep in mind, you guys, that I am a swing trader, so I am looking for the bigger movements and I am looking to hold positions, okay? So I analyze the monthly, weekly, and the daily, and I primarily enter trades on the daily time frame. Now, at the same time, while entering trades on the daily time frame, I don't look at my monthly time frame every single week. I do look at my weekly time frame every week, but there needs to be a reason to go to the weekly time frame. So on Fridays, I'll look to see how the candle closed on a Friday, and depending on how the candle closed, it just helps me understand what I want to see price do and where I'm hoping price can go. So let's go ahead and get into the analysis from last week. Now, last week, I was hoping that price could stay above this week, I was hoping that price could stay above 1.87550 Australian dollar. That is the exchange rate, in which I was hoping we could stay above. Price came into my zone and gave an inverted hammer, which is one of the candles that tells me that the buyers could potentially take back control. Also because we've been in an uptrend going up, as you guys can see. So as you guys can see, price was making higher high points and higher low points. So the last higher low before this one was down here at $1.85378. So you can see that price is making higher highs and higher lows, which tells us that price is in a trend. Now, we always hear trade with the trend until the trend bends or the trend is your friend, right? So I was treating this as, okay, this is an opportunity to continue the trend trade, but obviously now the sellers have taken control. So now what this tells me to do is stop being the seller. So I'm going to treat the trend as my friend still, since it went the opposite way. Now, this is now for my routine. I have a risk management routine, and this is the last part of the routine where this is called post-market analysis, where I'm out of the position and I need to now see how I feel about the position. Am I upset about the position? Just a bit, because I did lose quite a bit of money. I did only risk 3% of my account going into the position. So that's 3%, right? So of course, no one likes to lose money. Now what I'm going to do is govern and check myself to see if there was a step that I missed. And to be honest, there's not, because we had a higher high, higher low, higher high. I have my estimations on place where I wanted to enter. I had the candle that said, Shaquan, this is one of the candles that you enter trades on, and I did buy. So I followed every single rule of mine, which is literally like a 3-step process, right? And unfortunately, price just went the opposite way. There was nothing different that I could do. Going up in time frames, going down in time frames, there was just nothing for me to do at the moment. So now what this does is gives me permission to reanalyze the position to see what I can do next. Now I have permission to go up in time frames, since now we have a reversal to find my next entry point. So before I do, I'm going to take you guys through a process that I have my students go through. Point out the fact that price just reversed. And the way we know price reversed is because it passed the last bulk of buyers, which is the demand area, because demand or the quantity of people buying the pound was actually high. Price went from the low of 187 to the high of 191. Now the fact that we passed that low tells us the sellers no longer see the pound as being as valuable as $1.91,556, the Australian dollar. So now what I'm going to look for is the next potential place to execute a sell from this time. I don't sell low. So I do live by the principles of we buy low and we sell high. So I want to see price pull back, right? And the area I want to see price pull back to, but the number I want it to stay below is going to be the previous high here around $1.915. So if price can pull back and I still have my zone, I probably end up drawing another zone with the under of the weekly time frame. As long as price can now stay below 1.91556, which means now my structure needs to go below that number, I will take a sell in the future. Okay, so I'm going to go to the weekly time frame to show you guys exactly what I mean. What I'm doing is paying attention to what's going on the weekly. As you guys can see, this was that big bullish green candle, that new high that price made. And yes, price was bearish. And even though price was very bearish last week, that was still not the signal to say sell. Because if that was the case, we could say that this signal will be to sell, this candle will be to sell, this candle will be to sell. You have to know when to follow the trend on one primary time frame. And I primarily and teach primarily people to follow the trend on the daily time frame until something changes. Now that we have that change, this is still the same candle, that high around $1.19915 that we need price to stay below. Okay? And so now what I am going to do is use this information to say, hey, if price stays below 1.91547, which is the rejection candle, then I am going to want to take a sell, right? So now when I go back down to my daily time frame, I have a range in which price can come back to retest to prove that it can stay to the downside, right? So that range is going to be anywhere within this area. And so we just have to see what's going to happen next with this pair. Today is Wednesday. We have 2 more trading days. I'm not looking for a trade anymore this week on this pair, because with me being a swing trader, I actually need a decent size pullback in order for me to want to enter the trade. So what I am hoping for is that the pound Australian dollar can continue to fall just quite a bit, maybe a few more 100 pips, then pull back, but we just have to see if that's going to happen, okay? So with this not working out, and to be honest with you guys, this is my simple routine. I don't do anything extravagant. I just go through the process to see if I follow up my 3 rules, and then I look to see what is going on in the market. 9 times out of 10, when I get stopped out, it's because the markets are reversing. And now that I have evidence of that reversal because a new low has been formed, I need to see where price is going to settle, where the lower low is going to come in at, and then where the pullback comes in at, so I can now know where my trading opportunity will come in at. After that, you guys, I'm done with the risk management part, and then I just go into the next pair, right? So with that being said, I'm going to now start to remind myself of the currency pairs that have worked out, or the other markets that I'm trading that have worked out. So for example, I took an options trade on Apple. So if I go to my Apple chart, still using the same technique that I use now, then I'm going to show you guys the technique that I use. I use what's called supply and demand. So I can see that price was in an uptrend, as I'm stating, just like how I stated on pound AUD. And I was able to take a trade here back up to the upside in an options position, okay? And this one has ended up going to the upside for me, and I've made the money back that I lost from pound AUD in an options position, okay? Now this is the first options positions that I've ever traded, because I normally just invest in the stock market, but I'm trying my hand in a different financial market, just trying it, just to see how it goes, still using my same technique: higher highs, higher lows, or lower highs, supply and demand in different financial markets. So I'm reminding myself that, hey, even though you lost money here, here's something else that helped you make money. So where there's a negative, there can be a positive, okay? Now, the next thing I'm also going to do is remind myself of a position that's running in the positive. And the position that's running in the positive for me right now is USDJPY. So this is USDJPY. I'm taking the trade up for a buy and I am in profit. And my take profit is back up to, I don't know why I have two of these, but it's back up to 110.880s Japanese yen cents. Now, while this has not hit profit yet, it has lingered quite a bit, but it still reminds me that I am still in profit. I entered the trade here on August 17th, but even though I've been in this trade for going on about 2 weeks now, this is still that's money that's working for me while I sleep. I don't really have to fight hard for this money, so these are still good profits, right? I think that anytime you don't have to work hard for your money, that's good profits. And then I'm reminding myself of trades that have helped me sit on my hands until they're ready to be traded. So for example, if we go back to AUDUSD, then you guys will see that this pair is at my estimation zone. And if you go back to the previous analysis in the previous video, this is the area that I wanted to see price get to. And so the fact that we're there now helps me say, okay, well, at least how I was looking for price to get back to this zone is working out. So if soon, let's say tomorrow, which will be Thursday, my last trading day for the week, if tomorrow shows me that the bears can take control, I am going to sell because once again, we are still in trend continuation phase. This is just a pullback on the daily time frame. So until price is showing me that even this pair wants to reverse, I'm not going to look for buys just quite yet. Not until we pass 0.74227, okay? But that extra push helped price get to my zone. The other pair that we took a look at was New Zealand dollar. Now, even though we're looking at New Zealand dollar, and yes, it is past my zone, I am a firm believer that we place trades because of, or we highlight areas we want to take trades at based on our zones or my zones, but I understand trend based on exchange rate numbers. So for example, if you guys look at the last two lower highs, which are right here, 0.71051, and then price drop, pull back, 0.7090 points drop, and now we're pulling back. All I need to see is price stay below 0.70901. If it cannot stay below that number, then yes, now I would take a sell. Now, I'm not in a sell on this pair quite yet. I'm still waiting for maybe tomorrow to see what tomorrow's candle will be. But right now, it's just in an area where if tomorrow it is bearish, I can take a sell position. But if not, I can sit on my hands. So as you guys can see, I'm not trying to enter into every single trade that I'm analyzing. What I'm doing is waiting for the right optimum opportunities, right? And what this does is it helps me trade less, it helps me trade smarter, and then stay focused on the positions that I need to be in. Now, in the last video, I got questions or comments about price reversing or people saying that they're buying. Please keep in mind that because I'm on a higher time frame, and if you trade on a lower time frame, you're trading a different cycle than what I am analyzing. So some people said that they were buying AUDUSD, which, hey, I find that to be good. Or New Zealand dollar, I find that to be good. Because once again, this is the pullback against the natural direction of price on the daily time frame. While I may be analyzing, you are counter trend trading this. Okay, so that has to be understood from the gate. It means you're right for what you're doing, and I'm right for how I'm analyzing my price chart. It doesn't mean we're wrong for either actions that we're taking. It's all about analyzing and sticking true to what you're doing on your price charts and the time frames that you're analyzing things in. Okay, we both are seeing the same thing, just taking different actions. All right, so y'all, that is literally my simple routine. Like, there's nothing extravagant about it. I really do believe in keeping analysis as simple as possible so it's understandable, right? I think all of us need to have our personal rules that says, hey, if we keep it this simple and we follow our methodology, then we'll be good to go in our own positions and in our own setups. So there are other setups that I am taking a look at. Hopefully by tomorrow, I may have an opportunity. If not, I'll wait until next week, because being a swing trader, we get to have patience because we're going to be holding trades for hundreds of pips, right? So we kind of get the honor to have patience in this game, to go and do other things, let the trades play out to see how they play out. and then we just go from there. That's honestly all we can do, honestly all any of us can do in this market. So I hope you guys enjoyed the video. If you did, give it a thumbs up button, and I will see you guys in the next updated video.